Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. market update. Today the market reversed after a test of a major support level. Interest rates continue to go up vertically and Bitcoin is taking a much needed break. Lots to talk about, so let's get right to the charts. At the time of this recording, it is 12:30 a.m. on Tuesday night / Wednesday morning, and currently the futures are down 13 points. So not a whole lot going on, but as we've seen the past few nights, things can really change in the futures overnight. All right, as I mentioned in the intro, we tested a major support level today. Just when you thought you were not going to have to see this zigzag pattern drawn anymore, here we go again. So here's that 381 level. Now is the area that acted as support resistance for quite a while. You're very familiar with it by now, that 100% extension. So we went back and forth through that through pretty much the entire month of January, breaking above it in early February, and here we came back down to test that level today. As you can see, open, traded below it, and then rallied to come back and close actually higher than yesterday. Looking at the 10-day moving average, you can see we didn't quite close above the 10-day moving average, however. So if this is going to be it, it's just a test of that major fib level. We need to see some follow through and a higher close in tomorrow's trade. Interest rates have certainly been the story lately, continuing their almost vertical move. As you can see here on the 10-year, there's the zigzag pattern with 161.8% extended C wave level, not very far away. Note the wave 3 labeling on the 10-year. In the last recording, the 10-year was in a wave 5. The 30-year was in a 3, but now the 10-year has relabeled to match the 30-year in a wave 3. Taking a look at the DMI, you can see that the ADX is showing that potentially the strongest part of this move is over. Positive directional indicator climbing above not just 40 but 50 and above that positive directional indicator. I added in TBT for the 20-year. Very similar story here. Taking a look at this zigzag pattern, and you can see here we are just breaking a little bit above the 161.8% level. I don't think we have the momentum to continue up to the next fib level. I think that this is showing, especially with the DMI here breaking above 40. Now it is underneath the positive directional indicator, but seems as though the 20-year is in line with the 10 and the 30, that we're basically just running out of juice here. Another part of the puzzle here, piece of the puzzle, he tried to say, that I'll add in a second. As you can see that the TYX, the 30-year, is exactly at the 161.8% extension, and with the DMI, the ADX above 45 and just barely outside that positive directional indicator. Now what I was talking about is Chairman Powell was on the financial networks today, basically stating that the Federal Reserve isn't concerned with anything else but employment. Until we get employment numbers back to where they were pre-COVID, they're going to keep the foot on the gas. So I thought I would share with you the chart of the M2 money supply. Over here you can see that it goes vertically up. You know, hear me talking about vertical charts all the time. We were already on a pretty good 45-degree angle of liquidity injection. And that move, that elbow where it goes vertical, is March. So that was right when the pandemic was at its worst and they came in and threw the kitchen sink at everything, and that was that big vertical move. It's been a couple little blips there. Note that one little piece over in the far right of the graph, that one little piece that sticks down, that was the end of December. Looked like maybe they experimented a little bit with withdrawing liquidity and changed their mind pretty quickly to go back to injecting liquidity. And that's where we are, at least with what the Federal Reserve stated today. And with the interest rates, I feel like the Federal Reserve may very well intervene, move in, and start increasing the purchase of bonds and treasuries and try to push those rates back down a bit. What do you think? Where do you think rates go over the next week or two? Continue to the upside, or do rates take a break and correct a little bit? Be interested in your opinion. Post a comment below this video if you would. Looking at the dollar, you can see that we completed that zigzag that we talked about in the last recording here in the wave 4. Well, now look, now we have a new zigzag pattern to the downside in the wave 5. So that shows that we're going to continue all the way on down to the wave 5 target. The zigzag ends at 161.8% extension, just under 89, but the wave 5 shows a potential move all the way down, breaking 88. Now that would be a bit dire for economic forecasts if we were to move down there. However, if I'm right with the Federal Reserve intervening in interest rates, that could definitely be enough liquidity to push the dollar down even further than where it is already. Looking at Bitcoin, as I mentioned in the intro, and we did a recent video on Bitcoin, right up here, as soon as we hit that 52,000 mark, right there, which was dead in the middle of our tap box here, the time and price projection, Elliott wave projection of where the wave 5 was going to go. From that point, you can see that we've basically just been going back and forth. That's what you would expect to see, although maybe not quite so much volatility, but it's Bitcoin, right? So it's going to be volatile. But when you see a move that hits a major target within Elliott wave, quite often you get a consolidation pattern at that point in time. Normally, that would be like a contracting triangle. In this instance, with Bitcoin, it appears to be more of an expanding triangle. So how long do we consolidate here? How long do we wait before the next move in Bitcoin? Only time will tell, but the fact that we're consolidating right in this area is not a surprise at all. Taking a look at the metals, looking at SLV, tried to break out yesterday. You hear me say this all the time. You need a second day, confirmation day, follow-through day in breaking a major point of support and resistance, major moving average, out of a triangle, any of those things. Well, we tried to break out yesterday above this recent wave 3 high. You can see we've been consolidating underneath there. So that looked good. Nice consolidation under resistance. Boom, you break above it. Couldn't hold it. Back down, no follow-through day. So here we go, we sit, reload, make another attempt. Now we're looking at gold. Gold isn't even close to making a breakout attempt the way silver is. Gold's still trying to get back above this 170 level. Now it is doing its best to hold right in here, right just above 165. But for gold to have any sort of a meaningful move to the upside, it's going to have to break above this 175 level. So if it can't get above there, then likely we just bounce around here as it has done in January and February in this 165 to 170 range. With the VIX, you can see that we did hold down in here in this area. There's that support area around the 20, 21, 22 area. You could kind of draw a line there if you wanted. I like it here because there's more touches to the line. But we didn't break down below that level. I mentioned before that if we broke below that, possibly came to try to fill that gap, that would go along with the market moving up to that 420 level, the 161.8% extension on the SPY. Hasn't happened yet. Still maintaining that volatility, holding in this area here, keeping things moving back and forth with the intraday volatility. But at some point in time, the market's going to make a break. Either we're going to head up to this next fib level here, or we're going to break down to this previous fib extension, the 61.8% level. Again, tomorrow's trade bears watching to see if we can close back above that 10-day moving average. I wanted to remind you about our upcoming Zig-Zag Mastery class. If you haven't signed up yet, use the link underneath the recording and get signed up. It's almost full and sold out. Zigzag is my favorite directional trading pattern. You've seen it everywhere here. Just in this recording at the 10, 20, and 30-year interest rate charts and the dollar. It's all over the place. I promise you it'll be a very informative session. Love to have you come along. And by the way, don't forget to hit that like button either. Or better yet, hit subscribe and you'll be notified as soon as one of these videos is posted. Thanks for watching. Hope you've had a great week. Back to talk to you again soon. Take care, everybody.